In this video, I want to share my bull thesis on Adobe and explain why I have been buying more of the stock recently. At the moment, Adobe makes up only about 1.5% of my portfolio, but if the stock continues to trade around these levels, or if the price falls further, I intend to continue increasing my allocation over time. But before we go any further, I want to be clear that this is not financial advice. Like every investment, it is your own job to do your own research and decide whether this or any investment fits your goal, time horizon, and risk tolerance. And if that's out of the way, let's talk about Adobe. So just in case you have not been keeping up with what has been happening to the stock, Adobe has been on a decline since the beginning of 2024. From its peak, the stock has fallen by more than 40%. Now, this is not the first time Adobe's share price has dropped that much. Back in 2022, the stock has also declined sharply, but that episode was very different. At that time, Adobe was falling together with the broader market due to all the aggressive interest rate hikes, which caused investors to de-risk and sell off growth stocks across the board. What makes the current situation different is that this time, the broader market has been doing well, and yet Adobe has continued to go down on its own. And all this is happening at a time where Adobe's fundamentals have actually continued to improve. Revenue has continued to grow, net income has been rising, and free cash flow has been trending up as well. In fact, in its latest earnings report, Adobe also delivered solid growth while beating both revenue and earnings per share expectations. Meanwhile, the sentiment is so bad that the stock is currently trading at one of the lowest price to earnings multiples that it has seen in more than a decade. So, what is going on with Adobe? From what I can see, most of the concerns fall into three categories. The first concern is AI disruption. With the rise of generative AI tools such as Nano Banana, ChatGPT image generator, and Sora, many investors worry that users may no longer need professional tools like Photoshop, Illustrator, or Premiere Pro. That's because if images, videos, and designs can be created instantly with just a few prompts, then traditional creative tools could become less relevant over time. Now, of course, the AI technology is still new and is little clunky to use, so it's currently not enough to challenge Adobe yet. But given the incredible speed that generative AI is progressing, these tools could eventually become good enough to replace what Adobe is currently offering. The second concern is increased competition. When you look across the creative software landscape today, there are alternatives for almost every Adobe product that we have today. For example, for photo editing, there are tools like Canva and Affinity. And for video editing, there are platforms such as CapCut and DaVinci Resolve. In many cases, these alternatives are easier to use, cheaper, or even completely free. And with Adobe facing competition across so many fronts at the same time, investors worry that the company could slowly lose market share or be forced to lower prices over time. Finally, the third concern is something called AI-driven seat dilution. Adobe's business model is built around charging on a per-user basis. But as AI becomes more powerful, fewer human creators may be needed to produce the same amount of content. If that's the case, then companies may eventually need fewer Adobe licenses. And in turn, this could reduce the number of paid seats within an organization, which would directly affect Adobe's future growth potential. Quick pause. If you're looking for the best brokers to kickstart your investing journey, check out Interactive Brokers. You will enjoy one of the lowest fees in the industry at just 35 cents per trade on the US stock market. It also offers Ireland domicile ETFs, perfect for saving on dividend withholding taxes. Plus, it also comes with free company research tools, so you can make smarter investing decisions. Feel free to use my Interactive Brokers link to open an account and start investing today. Alright, let's get back to the video. So, those are the main fears weighing on Adobe today. Now, let's address those concerns one by one, starting with generative AI disrupting Adobe. To properly address this, we first need to understand who Adobe's customers really are. If we go into Adobe's investor presentation slide, we can see that Adobe serves a wide range of users. These include business professionals, creators and creative professionals, as well as marketing professionals. However, despite this wide range of use cases, Adobe's core users aren't the small and casual users like you or me. Instead, the majority of Adobe's customers are professionals who rely on its tools for hours every day as part of their day job. These include professional designers, video editors, marketers, animators, game studios, advertising agencies, media companies, and large enterprises. In fact, There are estimates showing that Adobe is used by around 90% of creative professionals worldwide and by approximately 98% of Fortune 500 companies. This means companies like Apple, Disney, Nike, and Pepsi depend on Adobe software as part of their daily operations. This is also reflected in Adobe's subscription revenue breakdown. Adobe categorizes its subscription revenue into two main groups. The first is creative and marketing professionals, and the second is business professionals and consumers. Creative and marketing professionals contribute roughly 70% of Adobe's total subscription revenue, while business professionals and consumers make up the remaining 30%. What's important here is that this second category is not made up entirely of casual users. It includes enterprise business users as well. Once it accounts for that, you could estimate that the vast majority of Adobe's revenue, roughly 90%, is driven by professional users, while only 10% comes from small creators and small businesses like you and me, which ironically are often the loudest when it comes to criticizing Adobe. This matters because these two groups behave very differently. Small users are far more price sensitive and a lot more willing to experiment with new tools, such as using Nano Banana or ChatGPT image generator to quickly whip something out. For them, the cheaper it is, the better. They don't need this deep control, advanced layering, or perfectly repeatable results. If the output looks good enough, then that is usually sufficient. On the other hand, for professional users, especially those working inside organizations, they aren't just creating a simple image or video. They are collaborating across departments, working with layered files, revising assets repeatedly, while ensuring that everything complies with the strict brand guidelines and legal requirements. And I know this from personal experience, because prior to starting this whole YouTube thing, I worked in a software company, a game studio, and an animation company. In all of these companies, Adobe software was the default tool, and we relied on it every day to get work done. Sure, you could argue that back then, generative AI tools did not exist yet. But even if you look at the job market today, the situation has not changed. Just search for any graphic design, video editing, or motion design role. One of the most common requirements is still proficiency in Adobe software. And the reason for this is simple. In professional settings, the creative work that you do is directly tied to business outcomes. A designer isn't just making something that looks nice. Sure, for my video thumbnails, I just need it to look presentable, and that's good enough. But for professionals, they are creating assets that will affect the brand's perception and marketing performance, and in turn, could bring in millions of dollars in revenue. Because of that, professionals will need precision, consistency, and full control over their work. Take for example, if McDonald's wants to launch an advertising campaign for their McSpicy, do you think they are going to throw a few prompts into some random AI tool and pray that the results come out good? Or are they going to have designers carefully control the exact colors, typography, logo placement, lighting, and composition so that everything aligns perfectly with brand guidelines? Now, just to be clear, just because generative AI tools aren't good enough today does not mean that they will not improve. We have all seen how fast this technology is advancing. For example, if we compare the video of Will Smith eating spaghetti from back then and today, we can see how fast generative AI can improve in just a year or two. So we can be very sure that AI tools will continue to improve from here. Now, how is Adobe addressing this? Basically, if you can't beat them, you join them. Adobe has been integrating AI across its entire product suite. In its latest earnings update, the company reported that generative credit consumption increased by 3 times quarter over quarter. This shows that users are actively adopting these AI features in real workflows. Now, you might be familiar with Generative Fill in Photoshop, which allows users to add, remove, or extend parts of an image seamlessly. But that feature is still 2023. Since then, Adobe has rolled out even more AI-driven tools. One example is Harmonize, which helps to blend elements naturally into an image by automatically matching its lighting and color. In the past, achieving this level of detail would have required you to painstakingly adjust every single detail, but now it can be done with just a click of a button. Another example is Turntable, which allows users to generate multiple product angles while keeping the design consistent. This is especially useful for marketing teams, where maintaining visual consistency across different views is critical. Then there's Generative Extend, which allows video editors to extend clips beyond their original footage. Instead of cutting a scene short or reshooting expensive footage, editors can seamlessly extend shots to fit the pacing and storytelling needs. These are just some of the features that Adobe released, and years from now, Adobe will continue to ship new AI tools, all of which will further improve the efficiency of professionals who use its tools. So think about this. If you are a user of Adobe, and if you are already using these features, will you switch to using something else like Nano Banana and Sora? Sure, those tools may be cheaper to use than Adobe, but it doesn't give you the control that you need. In Adobe, you can fine-tune the results by adjusting layers, moving things around, tweaking the fonts, and making small but critical changes that matter in professional work. On top of that, Adobe is not limiting itself to its own models. Through Firefly, Adobe has already integrated with multiple third-party AI models, including Flux, Runway Gen 4, 11 Labs, and most recently, Google's Nano Banana and Rio. This is important because Adobe gives users access to the best tools available, all within a familiar and professional workflow. That makes Adobe more resilient and not less as AI technology continues to evolve. Beyond that, through Firefly, companies can also train and fine-tune models using their own proprietary assets. This means brands can generate content that is consistent with their unique visual identity, tone, and style. Finally, there's one big advantage that Adobe has that many other generative AI tools do not, and that is brand safety. Adobe's Firefly models are trained on openly licensed and public domain contents, making them safe for commercial use. Because the last thing that you need is to accidentally generate something that's owned by Nintendo and getting sued by them. When you put all of this together, it becomes clear that AI is not going to disrupt Adobe. Instead, it is AI that will be empowering Adobe and how it is used in professional creative workflows. Next, let's address the competition concern. When most people see Adobe, they see it as an image editing company, or video editing company, or vector arts company, or a combination of all of them. But Adobe is much bigger than that. If we look at Adobe's product catalog, the company offers more than 60 different applications. For creative professionals, there are tools like Photoshop, Illustrator, After Effects, Lightroom, and InDesign. For documents and business workflows, there's Acrobat. For marketing and enterprise users, there are products like Adobe Experience Cloud, Advertising Cloud, and analytics tools that help companies manage, measure, and optimize marketing efforts at scale. Then, what Adobe does is bundle all of these products together and offer them as a single subscription. These are plans for individuals, businesses, and education institutions. So, does Adobe have competitors? Technically, yes. For Photoshop, there are dozens of alternatives. For video editing, there are many competing tools as well. And on paper, it looks like Adobe is facing intense competition across almost every category. But the reality is that many of these alternatives serve very specific use cases. For example, tools like Canva are excellent for quick designs, social media posts, and templates, especially for non-designers. But they are not built for complex image manipulation, detailed color grading, advanced typography, or layered production workflows that professionals typically rely on. Similarly, CapCut is good for short video content, but it can't replace professional video editing pipelines used for long-form content, advertising, or film production. Even more advanced tools like DaVinci Resolve, which are strong in specific areas such as color grading, but they still do not cover the entire creative stack. This leads to an important point. Competition at the individual product level does not mean competition at the ecosystem level. Replacing Photoshop with a cheaper alternative does not replace Illustrator, After Effects, Premiere Pro, InDesign, and the dozens of integrations that tie these tools together. For professional teams, the real value comes from how seamlessly these products work together. A design might start in Photoshop, be refined in Illustrator, animated in After Effects, edited in Premiere Pro, and finally delivered through Acrobat or integrated into a broader marketing workflow. That kind of seamless handoff across tools is almost impossible to replicate with a collection of disconnected alternatives. This is also why Microsoft Office remains dominant despite the existence of Google Docs, Notion, and many other productivity tools. Some of these alternatives may be cheaper or even better at specific tasks, but most organizations still use Office because it is standardized, widely supported, and already deeply embedded in their daily workflows. So Adobe benefits from the same kind of moat, which is built on standardization, network effects, and switching costs. Creative industries are largely standardized around Adobe's file formats, shortcuts, workflows, and collaboration practices. And once the workflow is established, switching becomes extremely difficult. According to industry's estimates, Adobe holds around 58% of the creative software market. At that scale, Adobe is effectively the industry standard. And that brings us to the switching cost, which is one of Adobe's strongest competitive advantages. Sure, when you cancel Adobe, you have to pay that sneaky cancellation fee. But in reality, switching away from Adobe is not just about cancelling a subscription and installing a new software. It involves retraining employees, rebuilding workflows, converting file formats, and even dealing with an inevitable drop in productivity during the transition. Take for example, if you were switching from Adobe Premiere Pro to DaVinci Resolve, it could take anywhere from a few weeks to several months to become fully proficient. And that's just one application for one person. Now imagine migrating the entire creative team or marketing department to a new workflow. Consider how long that would take, how much productivity would be lost, and whether the business can realistically absorb that disruption. Then there's also the talent factor. Adobe skills are widely taught, widely expected, and widely available in the job market. If a company switches to some random cheaper alternative, hiring not only becomes harder, but there's also potentially higher training costs. In many cases, it is simply easier and cheaper to keep using Adobe than to disrupt a system that already works. This is the same for me too. Even though my Adobe subscription has gone up almost 30% over the past 3 years, I have to lan sak tham and keep using it, because I would rather keep paying the money than spend time relearning entire softwares and finding an entire new team. And the truth is that for the 90% of the professionals who are using Adobe, Adobe's software costs are a very small part of overall marketing or production budgets. When you look at a company like Coca-Cola, a significant portion of marketing spend goes into media placement, production, and distribution. In comparison, Adobe subscription fees are pretty much negligible. If anything, the risk of workflow disruption or compatibility issues far outweighs any potential savings from switching to cheaper tools. So this is why Adobe has strong pricing power and why, despite the many competition out there, they have not meaningfully eroded Adobe's position. Adobe is not just selling software, it is selling the infrastructure that the entire creative industry runs on. Now, let's move on to the concern of AI-driven seat dilution. The fear here is that if generative AI becomes powerful enough to make creative work significantly more efficient, companies might need fewer designers, fewer editors, and therefore fewer Adobe seats. Over time, this could slow Adobe's revenue growth. This concern was brought up at the Adobe Max event, and Adobe's Chief Executive Officer, Shantanu Narayan, addressed it head-on. He said this: "What we are seeing is continued growth in terms of seats with Creative Cloud. When you look at Express monthly active users, when you look at Firefly growth and Firefly monthly active users, we are seeing more users coming in, and we are seeing that increase happening. We are also seeing a growth in automation." He added, "We are seeing both seat growth increasingly, also new customers coming in at the low end and the freemium side of the business." So based on Adobe's data, AI is not reducing the number of seats. In fact, it is doing the opposite. AI is expanding the top of the funnel by bringing in new users through tools like Adobe Express and Firefly, while existing professional users continue to maintain or even increase their seat counts. On top of that, Adobe has changed how it monetizes AI through something called generative credits. Generative credits are consumed whenever users use AI-powered features such as image generation, video extension, or other Firefly-based capabilities. These credits are included in Creative Cloud subscriptions, but heavy users who need more capacity can purchase additional credits or upgrade to higher tier plans. As shown earlier, in Adobe's latest earnings update, Adobe has reported that generative credit consumption increased by 3 times quarter-over-quarter. What this means is that Adobe's revenue is no longer tied purely to the number of users it has. Instead, it has also become tied to how intensely AI is used. As AI adoption increases, Adobe's AI credit monetization will scale with how frequently customers use these features. On top of that, Adobe is able to acquire these credits from partner models in bulk and resell those capabilities to customers, and that will create another layer of margin expansion. So if one designer can now produce more content using AI, that does not reduce Adobe's revenue. In many cases, it increases it because higher output requires more AI usage, more credits, and possibly even higher tier subscriptions. So with that all being said, where do I think Adobe's valuation is today? According to several analyst sources, Adobe's earnings per share growth over the next 3 to 5 years is expected to be in the range of roughly 11 to 15% a year. If we take the midpoint of around 13%, that would suggest Adobe has around 15% upside from current levels. But if Adobe is able to maintain its earnings growth closer to its 3-year and 5-year historical average of around 15%, the potential upside will move closer to 25%. Note that these estimates also do not account for potential incremental growth from Adobe's AI monetization strategy. For example, increased adoption of generative credits, higher tier subscriptions, and deeper enterprise usage could provide additional support to earnings growth over time. Also, Adobe is currently trading at a relatively low price-to-earnings multiple compared to its historical range. If sentiment improves and if Adobe's valuation multiple moves closer to its long-term average, then earnings growth combined with a higher valuation could lead to even higher returns. In short, despite the negative sentiment, Adobe's underlying business remains strong. The fears around AI disruption, competition, and seat dilution are not supported by how customers are actually using the products, nor by the company's financial performance. Adobe continues to be the industry standard with its powerful ecosystem, high switching costs, and steady growth. And with the stock trading at a reasonable valuation today, I am adding to my position and staying invested for the long term. Anyway, that's all for this video. Hope you found this useful. Like, share, and subscribe as I'll be posting new videos every week.